So is the Sydney property market recovering and showing signs of growth? Let's have a look at that and look at some of the headwinds that might be approaching the Sydney property market. So basically, the Sydney property market has performed quite well over the past few weeks. Most recently, clearance rates were up above 75%, and it's been the case for the past few weeks that that's occurred. Now, this is on steadily increasing stock, which is generally a positive sign for the Sydney property market. Let's have a look at some of the reasons why that might be the case. So the basic reason the property market has had a bit of an uptick is really twofold. Firstly, interest rates have gone down 50 basis points. Obviously, the amount that's passed on to borrowers is a little bit lower because banks haven't passed on the full extent of the RBA's rate cuts, but interest rates have decreased. Secondly, APRA has reduced its lending assessment requirements, meaning that people are now going to face less stringent assessment requirements to determine whether they can afford a loan. Whereas previously they'd be assessed whether they could afford 7% or higher, now they'd be assessed on whether they can afford the current interest rate plus 250 basis points, suggesting they're being assessed on a much more lenient standard, which is going to be much easier for them to afford a loan. So those are some of the reasons people have had better access to debt, and to some extent why debt has become cheaper, so people have been able to afford property, perhaps leading into a bit of an uptick in clearance rates. Now let's have a look at some of the factors that need to be treated with nuance about this. The first major factor is this is still on very low stock, suggesting that some of the stock might not even have come to auction, some of it might have been withdrawn, some of it might have been sold before because of a lack of confidence. So we really need to bear that in mind when assessing these clearance rates, the low stock that exists. The second thing we need to bear in mind is there's relatively little room for prices to tick upwards much in the short term, because wage growth has been very sluggish, and we can see this in the talk of the RBA reducing rates by even more because of the lack of wage growth and the lack of consumer confidence. What this suggests is that people can't really afford much of a higher price. Even if clearance rates are relatively strong, there's a limit to how much prices can increase because there's really a ceiling on what people on average can afford, suggesting really a cap on prices, or at least an implicit cap based on people's affordability. So for that reason, there's going to be a limit to how much the property prices can increase in the short term. A third major impediment is in relation to global factors. Now, there's a bit of a global economic slowdown, to some extent driven by the relationship between the US and China, which has on-flow effects to Australia, particularly in relation to exports, which then itself has on-flow effects to employment and wages, which again create a bit of a damper on the property market. It also creates a bit of a damper on foreign money coming into Australia to buy property, but of course that hasn't really been much of an issue for the past couple of years anyway. But nevertheless, that is going to put a bit of a damper on some of the property price increases. So another major factor that will coming into spring is that, as I've indicated, over winter there's been relatively little stock in the market. But as we get further into spring, there's going to be more stock in the market. So we've got the same number of buyers but more stock. Obviously that means at least one of two things will happen. Either A, prices will decrease, or B, clearance rates will decrease. What this suggests is that as we're getting more stock into the market, we really need to reassess how much the property market is recovering as we see what clearance rates do as we've got more stock. So for that reason, property prices might not continue to tick up that much when we get more property coming to market. And to a large extent, as I've indicated, the lack of stock might be to some extent driving some of these clearance rates. So I hope this has given you a bit of an idea about what's happening in the Sydney property market, whether a recovery is going on, and why that recovery might be relatively limited, but nevertheless some of the drivers that are behind the appearance of a strong clearance rate and a strong property market at the moment. So I hope the video has been interesting to you. If it has, it would be great if you click the like and subscribe buttons, and I hope to see you next time. Bye.